Hey, everybody. So hope everyone's excited for the start of this lovely webinar where we're going to be literally talking about what to expect in 2023 in terms of real estate. Should be a lot of fun, a lot of information, got a lot of stats here for you, and a couple predictions that we get to see. Am I right or am I wrong? We'll find out sometime this year. So, but it's going to be a fun thing. And I think you guys will get some good information from it. Feel free to leave comments if you would like. I'm open to any suggestions, comments that you might have to be able to assist in getting this taken care, answering all your questions today as we start out 2023. It's hard to believe that 2023, we're almost 2 weeks in. It feels like it just started yesterday, doesn't it? You know, I remember ringing in the new year with my family. I remember having a couple of days off. And ever since then, the month seems like a blur. And here we are, right in the middle of the month. So it should be fun. So go ahead and get my screen shared. We'll go ahead and get this party started. So all right, so welcome to tonight's webinar where we are going to be focusing on 2023 and what's ahead for the year. If you're not aware, my name is Tim Veigle with Watson Realty. I am going to be your MC for the day for a little bit, probably take about half an hour to get through everything. But more importantly, it's about getting you the information that you need so you can make the proper decisions on what's going to benefit you as 2023 carries on. So, and just a little bit about me. I work for Watson Realty. I'm a realtor. I also have my broker's license. I've been with the company, feels like yesterday, but I started back in March of 2014. So I am going on 9 years, which is crazy to think about. I've been chugging along ever since. I do about 25 deals a year, give or take. So just a little over 2 a month. And, you know, I just chug along, keep moving, one foot in front of the other. It's all you can do in the real estate market. So I'm sure you're curious what we'll be covering today. Well, first, before we look at the future, we got to look at the past. So we're going to take a little high out view of how the market was in 2022. The one thing I can tell you about 2022 is it was unpredictable. We had our highs, we had our lows. We got fear mongering out there. But the fact is, we're making it through. We are one step closer to a hopefully more stable market this year. I know it feels like every year it's a different type of market, and the last year was definitely a very unique one. We're talking a little bit about predicting the mortgage rates in 2023, some scary headlines that are out there, and then what's ahead in 2023. My top 5 predictions, and hopefully my crystal ball isn't foggy, but in these currently unprecedented times, I think everyone's crystal ball is a little bit on the foggy side. So start off, the past is your lesson. The present is your gift. The future is your motivation. So we need to always look at the past so we can learn from it and enjoy the present, because that is truly our gift. And stay motivated, because even though it might be a struggle today or yesterday, tomorrow's not going to be a struggle if we keep chugging along. So let's take a look at some of these numbers for 2022. Starting off, we got single family home. And I kind of broke it up for you because it's try to make it a little easier for you. So I broke it up by each quarter for the 5 main counties that we have in Central Florida of Orange County, Seminole County, Lake County, Volusia County, and Osceola County. And then we're looking at the median sales price of single family homes in the borders for 2022. So starting off with Orange County, you can tell, started off with 429,000 median sales price, quickly jumped up to 460. And then that's where it kind of stabled off. It went a little higher to 463 going into Q3, but then dropped back to 457 in Q4. Now, Seminole County basically did the same thing. 405 to start the year, jumped up to 440, then started pulling back at 431 and 425. Lake County also did the same thing. 361 jumped up to 385, then it started pulling back to 384 and 380. And Volusia County, again, the same thing. Jumped up to 307, pulled back to 331, jumped back up to 340, back down to 345. And then you have Osceola County that went from 400 to 422, down to 415, back up to 425 in Q4. So what we're seeing, I mean, we saw a lot of predictions last year. And one of the big predictions was that it eventually start flatlining. And that's kind of what you're starting to see. Now, it doesn't mean that you're going to have a crash. It just means things are starting to level off and simmer down. Now, condos, townhouses, and everything in between last year in Orange County started out 221, then literally 250 for Q2, Q3, and Q4. Seminole County, kind of similar, 231 to 252, 255, and 255. Lake County went from 180 to 195 to 194 to 215. Volusia County, 270, 260, 270, 250. And then Osceola County, 278, 319, 312, 317. So you can see the differences between these type of properties compared to single family. So because of the price difference on them, that's why I wanted to separate them for y'all. So we have a bigger idea of what's going on. Now we're going to jump into the rental market. So in Orange County, typical median rent was $2,150, then jumped up to $2,200, $2,239, and then back down to $2,200 for Q4. Seminole County, $1,895, $2,092, $2,045, and then $2,055. So, and then Lake County, you got $2,080, $2,120, $2,165, and then $2,005. Volusia County, $1,750, $1,800, $1,898, $1,870. And then Osceola County, $2,127, $2,250, $2,300, back down to $2,155. So for the most part in Central Florida, we're probably low twos for rental. Some are going to be higher, some are going to be less. But if you're renting a home or anything in Central Florida, expect to be paying $2,000. Now, this one's a fun site that I like to look. I didn't get the chance to grab Osceola County in here, but I grabbed a few counties just to let you know. You ever wondered, you always hear about all these people moving to Florida. Where are they coming from? Well, in Seminole County, for example, Orange County is coming to us, Miami-Dade, Suffolk County in New York, Queens County in New York, and Cook County, which is Chicago, is coming to us. One of the more interesting ones I found is this one right here is Lake County. And Lake County, for the most part, people that are moving there are from the state of Florida. So it kind of gives you an idea. Lake County is not popular with those outside of the state, probably because they don't know much about it. So Orange County gets Kings County, New York, which Kings County is not going to Seminole County. And then, of course, Volusia, we're getting Orange County, Seminole County, Miami, and Suffolk. But it gives you an idea of what counties are moving to our counties. So, and for the most part, when you look at the map, our Central Florida counties are green because we're getting more people coming to us than we are leaving us. Now, let's talk a little bit about mortgage rates. So, if you're not aware, the mortgage rate, 30-year fixed mortgage rate, stays pretty lockstep with the 10-year treasury yield. So as the treasury yield goes up, mortgage rates tend to follow. Over 40, 50 years, the average spread between the two is 1.7%. So it kind of gives you an idea of the way that it moves. And you can even look down here recently, like, look, this is a pretty sharp uptick. This one's actually starting to get a little more flat, which is a good thing, because what that's going to mean is that mortgage rates are going to start coming down. So again, like the slide said, the panic is starting to subside. So this dotted line is about the 50-year average, and we're pretty well above that. So we expect it to come down, and it's already starting to come down. The last Fed rate increase, our mortgage rates actually dipped down a little bit. So some people are very confident in the market, some are a little confused. You know, I'm a big sports person. So when you read different sports articles from different news agencies, you can get a different story from everyone you read, and you're not getting the full picture. And it does make you a little more confused. And that's the same thing going on in the real estate market. It's a little confusing out there because you can read a lot of different headlines and things that make you feel that the sky's falling. The sky's falling, Stuart Little, but is it really? So there are different scary headlines out there. Some of the ones I have seen: foreclosures double over the year. Fed raises rates to bring down real estate market. Are we heading for another real estate crash? Has the real estate bubble popped? All these negative headlines. If I were you, I wouldn't buy either. But the fact is, they're not really showing the true picture in our market. You know, we are still in what's considered a seller's market. Now, I've had people ask me, with the rates going up, it doesn't mean buyers are not buying. No, there's still buyers that need to buy, because guess what? We all need a place to live. That's just the way it is. What it does mean is in 2020 and 2021, when I'd list a home and get 25 offers, now I'm getting 1 to 3. So there's a lot of buyers that are not in the market now, but you're still getting multiple offers, which is very good for the seller still. It's also still good for the buyer, because the 20 to 25 offers, if you want to win, which is what the strategy was, you have to put together a ridiculously strong offer. And so let's take a look at some of the stuff. Central Florida short sales and foreclosure market. So in 2022, 294 homes sold that were either in short sale, foreclosure, or what we consider distressed property. 294. Now, taking that 10 years earlier in 2012, we had more than 5,000 for the entire year. And that number greater than 5,000 could have been substantially great. So problem is, my MLS only shows me 5,000 plus. So you can tell one of the headlines that was on there was that foreclosures doubled. They could have doubled. If you had 50 in 1 year, you went up to 100, they doubled, but it's nowhere near where we were 10, 15 years ago. So, and that's the key thing, because whenever you hear double and increase in foreclosures, you go back to the Great Recession. And that's not necessarily the case. Now, what's ahead for 2023? Let's get those crystal balls out and get some predictions going on. So prediction number one that I have for our market is buyers will start to flood the market. Seeing the interest rates start to stabilize and even see the little dip, they're going to want to take advantage of it because they're afraid that it's going to go up higher and higher. And let's be honest, we're spoiled with low interest rates. High fives, low sixes are not horrible rates, but it's not what we're used to. I mean, we just came out of where people are getting 30-year mortgages for 2.5%. So that's not where we were. And also seeing homes sit longer, it's going to signal to both sellers and buyers that I might be able to get a deal. You know, in real estate, sometimes the best deal is buying a home. But in this case, it's signaling that, hey, this home, there's something wrong with this home. It's kind of crazy that you'd say there's something wrong with this home if a home sits longer than like 20 days. But that's the reality of what we went through in the last market. Keep in mind, about a year ago, the average days on market was 6 days. If you watch my Market Monday thing on Monday, this past Monday, we're right now ticking around 35 days locally. So big jump. And it's going to signal to buyers that there's something wrong with the house, even though there's nothing wrong. We're just in a period of time where it's going to take a little longer to sell. It's not going to go over the weekend. You can't list on a Thursday, contract on a Sunday anymore. Prediction two, we're going to see an increase of novice investors. So, and why wouldn't we? See, what the people that are going to want to start getting into investing in real estate are going to be the ones that they saw people selling homes and get this big payday of cash when they sold a home, and also hearing all their friends and seeing everyone complain about the increase in their rent. Why wouldn't you want to? I mean, heck, look at it this way. $2,100 is the median mortgage. That's giving you $5,000 extra a year. You do that a couple times, you now have someone else paying you to do whatever you want. So I think a lot more novice investors are going to start tapping into the market. Prediction three, we're going to see the interest rates by the end of the year inch closer to 5%. There's even a chance it might go slightly lower. So, but I think it's going to continue to inch down. There's a lot of data out there that's showing that. One of them is, if you didn't hear, this morning, the CPI, which that's the Consumer Price Index, decreased by 0.1%. CPI is what they use to look for inflation. So that decrease of 1% or 0.1% was expected, but it also signals it's moving in the right way. Another indicator that came out like a week or so ago was the unemployment rate. The unemployment rate actually decreased. So that's a good thing, because that means more people are able to work. But the more interesting data from the decrease wasn't that the thing decreased, it's that the actual rates people are getting paid stayed the same. So there was no increase there. Because there was no increase, it means it's going to help pull back on inflation. So we keep our inflationary numbers moving in the right direction. So because of that, and I mean, we'll find out when the Fed announces their thing, but I wouldn't be shocked if the Fed decided to stay put and not raise rates at their next meeting, which I think is next week, I believe. Wouldn't be shocked. If they do decide to raise the rates, it's going to be very small. I don't think it's going to be some of these 0.75s that we've been seeing that kind of like was shocking the system. So I think it's going to be very small if they do raise it, but it's a coin toss, but I'm going to say that they're probably not going to. We'll find out if I'm right sooner than later. So, but you got a lot of stuff working in our favors when it comes to inflation. And if they keep raising rates, like, because income stayed the same instead of what it's been doing, which is slightly going up. So if it stays the same, and they raise the rates, they're punishing the middle class who's not getting a pay raise. So they don't want to necessarily do that to force us into, which they've already been trying to force into a recession, but more importantly, a depression. That's definitely what they do not want to go. But because of that, it's going to loosen up on the actual interest rates, and we're going to start seeing the interest rates move in our favor a little bit and keep lowering. In fact, I mean, you've already seen them starting to do that in the last 30 days. So hopefully that'll continue because of these outside forces. Prediction 4, we will see a disparity across the country with relocations. So we already, in the state of Florida, we're already seeing an influx of out-of-state buyers. We've been seeing that for a few years because of the pandemic. But coming out of this last winter and the great winter storm that was just experienced north, I think warmer states are going to start seeing an influx from the colder states. It happens every year because some people are just tired of dealing with the cold and the snow. But because of this most recent bad storm that created all the debacles with the flights and everything, I think many are going to start thinking about doing that. And if they're not ready to leave up there and relocate, they might buy a second home or investment home in a warmer state so that when they are ready, they already have that place picked out now. So I think these are some realities that we could start experiencing with an influx of more into our state, especially Florida. Prediction 5, I think we're going to start seeing a rush to market with first-time home buyers. I mean, we already have first-time home buyers, but they kind of pulled back in the market because 2021, starting 2022, was not favorable for them. A first-time home buyer putting down 3.5%, 5% could not go into negotiation and beat out someone that was willing to waive the appraisal, waive the inspection, and putting down 20%. It just wasn't happening. So that experience favored the experienced buyer. Now, first-time home buyers, they feel like they might have missed out on something. So I think they're going to start, especially the younger generation, seems like younger and younger are starting to see the value of purchasing a home versus renting a home. So I see that uptick of people wanting to do it. Like, imagine someone who's 22, graduating college, and in the last 4 years, they saw the interest rate double, and they dealt with the pandemic, and they saw home values increase 50 to 100K. So in their minds, potentially, they're going to start wondering, I missed out this time, I will not miss out again. So I think that younger generation in the 20s is going to start jumping on it. Imagine like looking at UCF, someone who just graduated college, which they have a program with Lockheed Martin. So they're graduating UCF, they got a good paying job with Lockheed Martin that's stable. They're going to jump right into wanting to buy a home. They have that a possibility because they don't want to miss out on what's next. So that, ladies and gentlemen, is my prediction for 2023. So I hope I hit some of these right. You never know. Like I said at the beginning, most of our crystal balls are a little foggy, especially coming out of 2022. But hopefully mine's a little clearer than most. So only time will tell. But if you have any questions, comments, concerns, please reach out to me. You can connect with me with this QR code. Give me a call. I'd love to hear from you. I'd love to debate any of these topics that you feel I might be off on. You know, it's your input that helps keep me sharp on the when I go out to work, you know, because I'm trying to work for you. But leave a comment, share this with your friends that think they need to hear this. The only thing I can tell you for sure, 2023 It's going to be a great year for you because you're going to make it that way. So I'll see you guys on my next webinar in about a month. But reach out if you have any real estate needs.